there is so much change that's going to be happening in 2025 that anyone making a prediction is going to be likely wrong. What I do know, and this is where I plant my flag, is that in the neighborhoods that I target, the under the radar neighborhoods along Eglinton West, there is value there. Hey there, people. Welcome to episode number 21 of the Under the Radar Real Estate Podcast. As always, I'm your host, Josh, and it is now 2025. So we are going to review the last market update from 2024, which would be December 2024. This is a really important market update because it kind of wraps up the year and sometimes gives us a few indicators of what to expect going forward into the new year. So let's jump right into it. That's enough of an introduction. Say Happy New Year to you all, and let's jump into it. So here's the homepage. As always, I like to review these numbers as soon as they come out. So today is Tuesday, January 7th. So the numbers have just dropped today. Generally, they come out a little bit sooner, but because it's the new year and the Toronto Real Estate Board's office is closed, they tend to release them a little bit later than usual. So we're about a week into 2025, and here it is. So here on the homepage, let's click it and let's see what they say. So here's the market watch. So I'm not going to read this verbatim, but I'm going to quickly skim through and look for some of the key things. So the first thing I like to look at is if they put any fluff in the text here. So quickly reading it, there's this line right here: borrowing costs were top of mind for buyers. High interest rates presented significant affordability hurdles and kept home sales well below the norm. So yeah, that's all true. There's nothing, they're not trying to paint a rosy picture or anything there. And then it goes on to say that obviously the market had benefited from some of the rate cuts in the fall, and the fall market kind of started coming back to life a little bit. Had they not done that, we probably actually would have seen sales and prices trickle down as we headed into the back end of 2024. But the rate cuts and stuff reinvigorated the market, brought buyers back to the table. So if we look at the annual sales, they were up 2.6% over 2023. So some positive signs in the Toronto real estate market that buyers are gaining confidence again. The one thing though that helped there, I would say, is that the average prices came down. The average prices were down over 2022 and 2023. So in 2024, with rate cuts and prices already being a little bit depressed, it's not surprising that sales are up 2.6% because it's a buying opportunity. So prices had already dropped in 2022 going into 2023. So it was inevitable that in 2024, if lending rates came down and prices were still depressed, that buyers would come back to the market, and they clearly did. So when we looked at, and they mentioned here, the average selling price for all homes in 2024 was $1,117,000, representing a decline of less than 1% over 2023, which is $1,126,000. Okay. So that's enough of that. Let's get into the market report to see what the numbers were like in December. Okay, so as is usually the case, we like to look first at the year-over-year summary. So down in the bottom right-hand corner. So sales were down in December 2024 versus December 2023, so almost 2%. Not a huge drop. I mean, if you look at the actual numbers, just over 3,400 in 2023 and 3,360 in 2024. So a few less sales in December. New listings were up huge though, and active listings. So already there's a little canary in the coal mine saying there that in 2025, at least the early expectations that we're still looking like we're going to be in a buyer's market in early 2025. Average price down 1.6%. Anyone following this podcast with some of these numbers, you can already kind of see that, yeah, it's while the market is rebounding a little bit, we're still buyer's market territory. Average days on market up 12%, and average property days on market average 14. The difference between those two is property days on market is if a property was listed, terminated, and then relisted, they include all of the days that property was on market. So property days on market is a bit more accurate representation of how long properties are being marketed for, and that's almost 56 days. So an increase of over 7 days over 2023. Now, if we look at the specific numbers for the city of Toronto, this is a Toronto podcast. We're not going to necessarily look at the GTA. So if we look at 416 specifically, detached house prices, average price was about just over 1.6 million, semi just over 1.3, townhouses 900 grand, and condo apartments around $720,000 as an average in the 416. So in terms of like percentages, detached house prices are pretty flat over last year. Semi-detached prices up 11% over last year. That's not surprising, and I'll tell you why. Because when we get into breaking down the neighborhoods later on in this podcast, you'll see that neighborhoods like in the east end of the city, that market's still pretty quite white hot, and we've been seeing that trend over the last few months if you've been following this podcast. So a lot of the east neighborhoods close to downtown have been seeing a lot of activity and pricing going up. And any one of you looking in the east end of Toronto, you know there's a lot of semi-detached houses in the east end, and those prices are going up. There's a lot of activity, a lot of competition, so it's not surprising that those numbers are trending upwards. Townhouses down 18% over last year. That might just be a I don't know why townhouses have dropped almost 20% over last year. My guess is just the type of townhouse that was being sold December this year versus last year has changed. But it's an interesting statistic nonetheless. Condos up almost 2% over last year. Not surprised again because condos had plummeted in price starting in 2022 and into 2023. So not surprising that there's a little bit of an uptick in pricing in condos. However, the one thing I will mention is that and this is purely speculation on but I have buyers looking for larger condos. I think this is due to the fact that larger condos are the one type that's actually selling. So a lot of smaller condos are still sitting on the market and not selling. So they're contributing to inventory, not sales. What's actually selling are condos that people can actually live in. So we're talking a lot of condos over 700 square feet in many cases, one plus dens, 2 bedrooms, 3 bedrooms, that kind of thing. So not surprising that numbers are up because the type of condo that's selling are generally condos that people can actually live in. Okay, so enough of that. That's the intro. That gives us a kind of base of where the market's at. Now let's look at some of the under the radar statistics, some of the statistics that we like to watch on this channel that give us an indication of trends and what to expect over the next little bit for you buyers out there, or even sellers looking to list, to give you a read on where the temperature of the market's at. So what we're going to break down right here is the sales to new listings ratio trend and the months of inventory trend. So sales to new listings ratio is you take the amount of sales that happened in the given month versus the amount of new listings that hit the market, and it gives you a percentage. So how many of those new listings actually sold within that 30-day period. So generally 50% is a balanced market. If you're below 50%, it's generally indicating buyer's market. That means less than 50% of the new listings that are hitting the market are actually selling, which would indicate buyer's market. If you're over 50%, then we're looking at an indicator that would tell us that we're now in seller's market territory. There's more than half of the new listings that are hitting the market are selling within that 30-day period, 30 to 31-day period. Months of inventory is another leading indicator trend. So months of inventory is essentially a stat that would say, like, if there was not another listing to hit the market from now going forward, how many months would it take to sell off all the inventory? Another trending statistic. So generally when it comes to months of inventory, 2.5 months is kind of like a balanced market. So if you're below 2.5, you're generally now indicating seller's market because it'll take less than 2.5 months to sell off all the inventory. Once you start moving over 2.5 months, now you're into buyer's market territory, at least for Toronto. Typically in Toronto, what we've seen over the last, I'd say like decade and a half, is months of inventory well below 2 in many cases, which usually indicates a strong market. So if you were to turn off the taps and not another listing hit the market, it'll only take 2 months to sell off everything. So that's the explainer of what these two things are. Let's now look at what those numbers are. So first up, we'll look at City of Toronto. It's that black band right at the top of the screen here. When we look at sales to new listings ratio trend, we're well below 50% at 38.9% sales to new listings ratio trend, which would indicate in many cases that we are still very much in a buyer's market. If we look at months of inventory sitting at 3.8, so well above that 2.5 months of inventory threshold, that would be a balanced market. So again, pointing towards the fact that we're still in a buyer's market. The market is still well supplied with listings. So there's a lot of competition among sellers. So when you have competition among sellers rather than buyers, it puts downwards pressure on pricing in most cases. Now, if we get a little bit more granular, first up, let's look at some of the under the radar neighborhoods, which for this channel, we track the neighborhoods of W03, W04, and CO3. So these are the neighborhoods that kind of straddle Eglinton West from, let's say, about Allen Road over to Weston. So if we look at W03 for months of sales to new listings ratio first, we're looking at 47.6%. So almost at that balanced market, almost at that balance point. And then if we look at months of inventory at 2.6, so again, balance. I would say W03, which is kind of like the southern end of the old neighborhood of old city of York, which is like Junction. Basically, you're looking at kind of upper downtown west side, if you can kind of picture that in your mind. So, so like Davenport down to like just about Bloor Street from Keel almost to Dufferin is W03-ish. So that neighborhood pretty much balanced. So not in buyer's market, not in seller's market, which would mean that the nicer properties in this pocket of the city are likely getting a lot of competition, and I can tell that from experience. If there's a nice property in Junction-ish neighborhoods, it's likely getting multiple bids, multiple offers, and selling most cases above asking price. However, because it's a balanced market, if you're not the belle of the ball, you're likely not, it's likely going to sit on the market a little bit longer, and it's likely not going to get top dollar. So that's kind of what a balanced market means in Toronto. It doesn't mean that everything that hits the market is going to sell for its asking price. It just means that in certain cases, in usually the cases where you have nice properties, they will have a lot of activity. W04, sales to new listings ratio. So W04 is kind of north of Eglinton from Allen Road over to Weston. So it's kind of like the northern part of Eglinton West. And Weston is located in W04 proper. We're looking at about 40% sales to new listings ratio, which is clear indicator that's buyer's market territory. Months of inventory, almost 4. So that won't necessarily apply to all of W04. Some of pockets of W04, like Briar Hill, which is closer to Forest Hill, a lot more active. You won't necessarily, if a nice property pops up, you will likely get into competition there. But for the most part, that area, we're looking buyer's market territory, which means you have negotiating power over sellers. And then when we look at CO3 is like Forest Hill South, Oakwood Village, kind of the trendier pocket of the under the radar neighborhoods. We're looking at sales to new listings ratio at 41% and months of inventory at 3.5. Now, CO3, while that looks like we are firmly in buyer's market territory, I will say that that most of these stats are getting influenced by the condos that are listed for sale in CO3. There's a lot more condo inventory in this pocket of the city. So my assumption there is that those condo numbers are skewing the numbers, because if we actually were to look at some of the neighborhoods that don't have condos, there's a lot tighter conditions. And we'll get to that later in this podcast when we look at some of the very specific neighborhoods that we like to target on this channel. Now, we don't really focus on the East End on this channel. I sell on the East End personally with my clients. And as I'd said before, the East End is completely opposite from most other neighborhoods in the city. We are firmly now in seller's market territory in some of these neighborhoods, especially when we look at E03, which is kind of the beach bit further east. 53% sales to new listings ratio in E03, and then 1.8 months of inventory. So these are very tight market conditions, and the months of inventory for all the neighborhoods in the East End close to downtown, so E01, E02, E03, they're all 2 or under months of inventory. So that tells me that tight market conditions and seller's market there. So if you're looking in the East End, very different from the rest of the city, you'd have to be prepared to get into competition for properties in the East End, especially the nicer ones, nicer properties that are priced well in the East End. Don't be surprised if on offer night, some of these properties are getting 5, 6, 7 offers in the East End in particular. So mixed market overall in December. Hasn't really changed much from the trends we saw going into the fall. No real surprises here, other than I think W03, which has really started to trend towards a balanced, maybe seller's market. Now let's look at before we get into the under the radar neighborhoods, one thing I like to look at is kind of the month over month numbers. And if we look at them here, so at the bottom of the screen, from November to December, we actually dropped in price by 40 grand almost. So November, we were sitting at an average price of 1.106 million. And for December, we're at $1,067,000. Now, it's an interesting thing to keep an eye on, because if you look at the previous year from November to December in 2023, went from $1,077,000 to $1,084,000. It actually went up in price. So November to December, a drop in price is an interesting thing to keep an eye on, because while December is a weird month because generally the best listings don't get listed in December, anyone who has a really nice listing, I tell most of my seller clients to avoid the December period, just because, I mean, you don't really have a lot of buyers, people on vacation, so on and so forth, to avoid it. But for the numbers to drop almost 40 grand month to month is an interesting thing to keep an eye on as we now are in 2025. With rates coming down, I think the expectation was that people thought prices were going to start just shooting up all of a sudden. We're not necessarily seeing that. I think on some nice properties, yes, prices are kind of getting back to where they were maybe a year ago. But overall, I don't want to read too much into it, but something to kind of keep an eye on. And it'll be interesting to see in a month from now what the January statistics show in terms of average pricing. Especially the month-to-month price rather than the year-over-year. Okay, so now let's head into the under-the-radar neighborhoods. That's this channel. So we are going to use Habistat for this. It's a little bit of a better tool for stats, a little bit more in-depth. This was actually created by a buddy of mine, one of my colleagues, Daniel Foch, who I'm going to actually try and get on this podcast for the first market watch of 2025, January. I'll see what I can do to try to get him on here. It'll be interesting to do a live. Maybe we'll actually go truly live on YouTube, maybe simulcast on his YouTube as well, and kind of give you guys a live reaction in real time. So let's use Habistat to look at the under the radar neighborhoods, and we'll compare them to Toronto in real time. So for the under the radar neighborhoods, before we were kind of more of a broad overview of W03, W04, and CO3, we're going to now get into the neighborhoods specifically that we really target on this channel. Because in CO3, for example, like Forest Hill and stuff like that's not what we're looking at on this channel. We want to look specifically at Oakwood Village. Okay, so first up, Oakwood Village. If you watched my last video that I posted on this channel, we already went over some of these numbers, but we can look at them again. because these are the full numbers now from December rather than when I did the video that wasn't fully complete. So now we're getting the real complete numbers from December. So look at the average price in Oakwood Village versus Toronto. So Oakwood, average sold price of 1.18 almost versus Toronto, which is $1,028,000. So if you watch my last video, yeah, it's an under the radar neighborhood and it's more expensive than the average in the city of Toronto. But it's one thing to take note is that when we look at Oakwood Village, and before we compare it, I get into the next comparison, we'll just kind of quickly go over some of the other numbers. Most average sale price to listing price is 101%, which means most properties are selling over the list price. There's about 25% of them are selling above list price. But the average days on market is 69. So in Oakwood Village, and I would assume that average days on market is a lot of the condo inventory. There's a lot of new condos that are sitting around that are listed on MLS, and they've been sitting for a while. So that's really bumping up the average days on market. But what I was going to say is that if we were to compare Oakwood Village now to Forest Hill, average price of Forest Hill is $5 million. That's right next to Oakwood Village. Or if we look at Humewood Cedarville, which maybe is a bit of a closer comp in terms of the type of house that you'd find in Oakwood Village, almost 1.8 million as an average in Humewood Cedarville versus Oakwood Village. So you're probably getting to understand now why I keep saying Oakwood Village is super under the radar, especially for those looking for that entry-level luxury product, because there's a lot of teardowns and rebuilds happening in Oakwood Village. And Oakwood Village, at least in my opinion, and it's already happening, is the next kind of cool, trendy neighborhood in Toronto. Yes, I'm a 40-plus person saying it's going to be the cool neighborhood, but it is. You have tons of cool new restaurants and coffee shops opening up on Oakwood. Off the top of my head, Porger's Lasagna is there. You have Primrose Bagel. What am I saying? Oakwood Espresso, best coffee shop in the city, bar none. You can fight me in the comments about what the best coffee shop in the city is. Oakwood Espresso, number one, no competition. Anyhow, with all those new cool trendy restaurants and shops opening up on Oakwood, it's changing it's not fully changing the vibe of Oakwood. Oakwood is still Oakwood, but it's bringing a lot of new life to the neighborhood. So now let's move on to the neighborhood just next to Oakwood Village, and that is located in W03, and we are going to be talking about Fairbank. Okay, Fairbank. So if we look at Fairbank, the average selling price in Fairbank was just over $1 million, so $1,006,000. So if we compare that to the city of Toronto at $1,028,000, now you're seeing why there's value in Fairbank. Fairbank is right next to Oakwood. Fairbank is actually one of the prettiest, in my opinion, and it's a biased opinion, but one of the prettiest neighborhoods in Toronto. It's very green. There's tons of parks. It has a lot of hills and valleys, a really, really unique topography in the city of Toronto. You don't really get that in too many places. So it's a lot of hills and valleys, almost feels like a little San Fran. But the cool thing is it's a neighborhood full of detached houses for the most part, but it's changing. And there's a few developers, Mod City and Blue Lion, who are moving into this pocket because they see the value there. So developers are already seeing the value in Fairbank. You have all these cool little bungalows. They're tearing them down and they're building fourplexes. They're building semis. I lived in a semi that was previously a detached house. It was on a 40-foot lot, and the developer that I bought from bought it, tore it down, and created two semis, creating the intensification and densification that Toronto needs. And a lot of other developers are following that and adding even more density to this pocket. And Fairbank is, in my opinion, one of the next kind of premier neighborhoods for young professionals. So if you're looking for the vibe and feel of a Forest Hill with green and grass and just a cool, quiet neighborhood feel, it's Fairbank. When I sold my house, it was a young professional couple that had been looking at Forest Hill. They were living kind of midtown. They bought my house, and we're seeing a lot of that kind of turnover. So young professionals, more and more young professionals moving into Fairbank and buying up the property. So Average days on market is 33, which is 7 days below the Toronto average of 40. And 20% of the homes are selling above list price and 101% sale price to list price ratio. So most homes are selling over asking price in Fairbank. So Fairbank is, one of the top under the radar neighborhoods that for buyers out there, you should keep an eye on, because I really feel that once that LRT opens up, you are right at an LRT station. Prices are going to start to really move up in Caledonia, Fairbank. So next up, we are going to look at, Keelesdale. Next up on the list. So Keelesdale, just next to Fairbank. So we're kind of going in one direction over here. So Keelesdale, the next under the radar neighborhood we are going to look at. Average price here, $794,000. So a significant, like $300,000 savings over the overall average in the city of Toronto. And homes here are selling for only 99% of the list price. So a lot of them are selling under asking. Now, but the interesting thing here is that the average days on market is only 25. So you're getting homes, for the most part, under ask. You are well below the overall average in the city of Toronto, but they're selling quickly, because I think some of the smarter buyers out there are seeing the value in Keelesdale. I mean, the median day on market is only 8, which is wild, right? So homes there, and it doesn't surprise me when you can find a house for sub $800,000 that people are seeing the value there. So with those days on market numbers being what they are, and with this price, I wouldn't be shocked if by the end of 2025, we're going to see Keelesdale as one of the top performers in Toronto. Once people really start to understand the value of Keelesdale, especially if that LRT opens up this year, it's going to completely revamp Keelesdale. Keelesdale has you could almost say 3 of the LRT stations cut right through Keelesdale. So, you don't really find too many neighborhoods that have 3 subway stations that cut right through the neighborhood. Developers already know it. If you watch my last video, I already mentioned two developments that are adding 6,000 new units to Keelesdale. And that's just 2 developments. There's a whole lot more. I think last time I did an analysis there, we're looking at well over 15,000 new homes that are planned for Keelesdale. And right between Keelesdale and Fairbank, you have my favorite development in the city, Beltline Yards. Look on my channel. I've already done a video on Beltline Yards. I'm going to probably do an update as we get closer to construction and sales there. Beltline Yards is going to completely change this entire neighborhood. That's a video for another day, but Keelesdale is the place to be for looking for a value buy in the city of Toronto. All right. Now, last up, we had talked about Weston a lot on this channel, but as we move into 2025, we're getting a little bit more granular and focusing really on Eglinton West. So we won't really touch big on Weston in this video, but one of the prime neighborhoods of Eglinton West is Briar Hill. So Briar Hill, the average price is just about $835,000. And homes here are only 97%. The average selling price to list price is 97%. So most homes are selling for about 3% under their ask price. So $200,000 savings almost over the overall average in the city of Toronto. And Briar Hill sits right next to Forest Hill. Like literally it's Allen Road that separates Briar Hill from Forest Hill. That is a tremendous change in price, like $3 to $5 million in Forest Hill versus $800,000 in Briar Hill. It's wild how undervalued Briar Hill is. I live, now a little bit of bias, I'm going to say I live in Briar Hill. I live in the Forest Hill Lofts, but it's actually in Briar Hill, Eglinton West. They named this building the Forest Hill Lofts, I'm pretty sure, for sales, to kind of tell it, whatever, to try to attach like a higher price point at the time 20 plus years ago when this building was built. But anyway, I look out over Briar Hill right now, and the amount of development, here, I've got a camera, I've got a window, let's look at it. So here is Briar Hill, right? So a lot of bungalows, a lot of big lots, and you'll see there's a lot of places, I don't know if you can see it really well, a lot of buildings getting built, a lot of construction going on. in Briar Hill. Let me reset this up. So a lot happening in Briar Hill right now. And it makes sense for builders to be looking at, if you can find houses for 800, 900 grand in Briar Hill, tear it down, build a semi, build a townhouses, build a fourplex, there's value there. And you pretty much get all of the amenities of Forest Hill, because Forest Hill, you can walk to Forest Hill from Briar Hill. I've walked to Forest Hill, I'd bike there. My son does camps in Forest Hill. So you literally get all the amenities of Forest Hill for a significant savings for your real estate. It's shocking that people haven't discovered Briar Hill yet. People who watch this channel obviously do. Average days on market, 17. So the buyers who have discovered Briar Hill understand the value here, and they're snapping things up quickly. So when something does pop up in Briar Hill, people are buying it. And also because they're affordable. You can find houses, detached houses, for under $1 million in this pocket of the city, which is wild. So that about wraps up some of the numbers that I wanted to cover for today. Bit of a longer video. Actually not that long. We're at what 30 minutes, so not bad. So to wrap things up, put a bow on everything, we are now in 2025. I don't think there is much change if you've been following my podcasts in terms of like where things are at. I don't think we're going to see much change in terms of price or temperature of the market. I think where things are right now, we're not going to see a massive change until the temperature probably starts getting better. There's a lot of things that could influence our market over the next few months. So I don't really want to sit here and make any predictions, because anything could happen. Trump is about to take office. We could see tariffs get implemented. We don't know how that'll necessarily affect the housing market here. We right now don't have a prime minister. Yes, he's still the prime minister, but he just resigned yesterday. So we don't really have a leader right now. When it comes to rates, is the Bank of Canada going to continue to cut rates? What's going to happen to our Canadian dollar versus the US dollar? Now, the fact that we don't have a leader, is that going to change things? What's the new prime minister like? How is that going to change the dynamic of Canada, right? Whether it be, it's very unlikely that the current party still retains power in the next election. They're likely going to lose. So that new incoming party, how is that going to change the dynamic of rates and real estate in Canada, but more specifically Toronto? We are probably also going to have a provincial election where we may have a new premier as well. There is so much change that's going to be happening in 2025 that anyone making a prediction is going to be likely wrong. There's going to be a lot of predictions out there. Some people are going to be right if you're just kind of throwing stuff at the wall and hoping it sticks. But I'm not going to do that, because I have honestly no idea what's going to happen. But what I do know, and this is where I plant my flag, is that in the neighborhoods that I target, the under-the-radar neighborhoods along Eglinton West, there is value there. That's one thing I do know, and I can say with confidence that there is value in Eglinton West. That's what I can say going into 2025. And this is where I've gotten a lot more granular now. We're only going to focus really on Eglinton West on this channel going forward. Now is the time to get into Eglinton West. And with all this uncertainty, if you're looking for a little bit of certainty, it is probably in Eglinton West, where there's a lot of variety of homes. There's a lot of developers building infill that we haven't seen in the city. So like I mentioned it earlier in the podcast, Mod City and Blue Lion, they're building these fourplexes that are, I think Mod City does more rentals. Blue Lion does miniature condos, right? So you're looking at a 4-unit condo building, which is the perfect type of condo for the city, where it's a small building, really low maintenance fees on average. I think I was looking at some of his older projects, and at most the fees go up to $250 a month. So the people who complain on my channel about maintenance fees, look at Blue Lion build, because they actually keep their maintenance fees quite low, because there's no amenities and you're really just paying for a reserve fund. They're building the right type of that. And on Eglinton proper, there's a ton of larger scale development. And I know people complain about large scale development, how it changes the neighborhood, but we also need more housing. And the large scale development that's being planned looks very innovative, especially when we look at like Beltline yards. What they're building is going to be super innovative, and I'm sure a lot of builders are going to copy their template moving forward, because the way they were going to mix in office and retail and a lot of the commercial into the residential is quite innovative, at least for Toronto. So really excited about that. And then lastly, I mean, just there's not too many places in the city where there's going to be a brand new subway line. I mean, it's here in Scarborough. Scarborough, another under the radar neighborhood. I don't focus on it on this channel, but yeah, we have a new subway line that will open at some point, hopefully in the next year. And that's still under the radar. I think people don't really understand how that's going to impact this neighborhood. I understand it because I live here, but yeah, with all the uncertainty that we have in this country, in this world, the one thing I can certainly say, my one prediction is that Eglinton West, the Brooklyn of Toronto, is where you want to be if you're looking for a value buy and you're looking to beat in the city of Toronto. So that's about it. We don't want to let this podcast run too long. We're 30 plus minutes now. Thanks for watching. Please be sure to hit subscribe, hit like on this video. Really working on trying to get guests into this podcast moving forward. I'm going to start bugging Dan Foch, the stats master for, I was going to say Toronto, but I mean for Canada really, to hopefully be on our next podcast. And then we'll try to get some other guests as we move into the year. So thanks for watching. As always, watch out for our next videos. Actually, my next video is going to be pretty fun next week. We're going to be debunking some more condo myths. I got a lot of condo myths in my comments. So rather than just continue to reply in my comments, I'm going to make a video to debunk some more condo myths. So thanks for watching. As always, peace out.